All right, guys, so welcome back. Now we're going to dive into a little, probably do an extension of what we've talked about before, returning inventory. Remember, if we're wearing hats, right now our current hat that we have on is we are the seller. We have already purchased inventory and now we have switched hats and now we're selling this inventory. So here's our example. Assume that on January 15, Borman Enterprise returned merchandise with a selling price of $3,000 for a cash refund. Okay, so we've done that already in a prior slide, but we'll make sure we cover it again. And then they said the merchandise originally cost Net Solutions $2,100. What two entries do we need to record? All right, so here it is. What we're now diving into is this first part we've seen before. The customer is wanting a refund, so we're doing a customer refund payable, a debit, and a credit to cash. We're giving them their money back. Now, the part that we're now going to explore is that the company, Borman Enterprise, they returned the merchandise. So that was different than before because in a prior example or the prior video, we looked at the customer kept Blake and Sons kept the merchandise. And in this example, they're actually returning the merchandise, right? And so that's where we get into, we're doing a debit to our inventory. So it's a debit to inventory because we're getting it back. And then we're doing a credit to estimated returns inventory. All right, so customer estimated returns inventory is a new account that we have not seen before. So let's talk about that particular account. So estimated returns inventory is a current asset account. It's reported on the inventory, under inventory on the balance sheet. And it is recorded at the end of the accounting period as an adjusting entry. So if I can just point to it, here's my, if I can, here, right? So here's my estimated returns inventory, right? And so before I move on, so that's what we have. Now, before I move on, let's discuss this estimated returns inventory. So very similar to how we did it for the customer refund payable account, at the very end of the year, we must also do an adjusting entry or not, yeah, an adjusting entry for estimated returns inventory. Now, if you are looking at this entry, if this is an asset account, normally asset accounts have a normal debit balance. But as we're going through this example, we are seeing where estimated returns is being credited, right? It's the opposite of what's going on. And because it alludes to this adjusting entry that we have probably did on 12/31/19, right? And so the journal entry that we've captured, very similar to what we did for the customer refunds payable, is at the end of the year on 12/31/2019, we had the estimated, estimated returns inventory, right? Current asset, right? Debit, credit. And so maybe we did an estimate of, say, $50,000, right? That was our journal entry. And we'll talk about what the journal entries look like in the next slides to come. But we did an adjusting entry of our debit was the estimated returns inventory of $50,000. And then our credit came out to the cost of goods sold, and that was $50,000. So we'll get into what the adjusting entry looked like. But when it was time to do a refund, or sorry, when it was time for the customers to return the inventory, that returned inventory was applied here, right? The $2,100, right? And so again, as part of business, we know that customers will ask for refunds and they will return inventory, right? And so this is our way of bracing ourselves for the return to come. We know it's going to happen, and so we are trying to create a safety net to ensure that it doesn't wipe out our business, and we're planning for such occurrences, okay? All right, so with that, I am going to move on to this example. So it says after the amount due on the sale of 28,000, the terms 210 net EOM. So if you're not sure what EOM stands for, that stands for end of month. So if I can write that, this stands for end of month. Okay. So after the amount due on the sale of 28,000, terms 210 net end of the month is received from a customer within the discount period, the seller consents to the return of the entire shipment, okay, for a cash refund. The cost of the merchandise returned is $16,800. So in the two questions to follow, it asks, what is the amount of the refund owed to the customer? And it's asking us to journalize the entries to be made by the seller to record the return and the refund, okay? So I'm going to switch applications to make this a little bit better. All right, so here we are, right? So let's just work through this, okay? So it says, let's just journalize what the customer has already done, okay? So it says after the month due on a sale, 28,000 terms 210 net 30 is received from the customer. So the customer paid for this within the discounted period, right? So that's awesome. So now we need to make sure we capture that. What does that look like? So it was 28,000 for the entire shipment, and then we offered them a discount, so they were only responsible for 98%. So if we did that calculation, the customer owed $27,440, right? So when we originally recorded that transaction, it was probably, I'm gonna go off to the side for a second because I wanna make sure, don't mess up the question. What that journal entry likely looked like was accounts receivable of $27,440, and our credit was to sales, right? $27,440. And then it told us that the cost of the merchandise was that. So I'm going to say cost of goods sold was $16,800 and my credit was inventory. Again, they didn't ask for any of this, but I would encourage each of you guys just to get into the habit of writing it out, because most questions, especially as you go through accounting 1A, they want to test your knowledge of do you already understand what the journal entries look like before, okay? Now they said the customer paid this within the discounted period, right? So what I'm going to do is just go off to the side here and just record that the customer paid it within the discounted period. And so what that would look like for me is doing a debit to cash of the $27,440 and a credit to accounts receivable of the $27,440. Okay. All right. So I'm gonna move back this way. Okay. All right. So it says that the first question says, what is the amount of the refund owed to the customer? Well, the amount of the refund owed to the customer, if they return the entire shipment, it will not, let me maybe make sure I specify, it will not be the full amount of the sale because they paid for it within the discounted period, right? So what we're going to refund to the customer is what they paid. They're returning the entire shipment for cash. So we're going to refund them $27,440. Okay. Now it's asking us in the next portion to journalize the entries made by the seller to record the return and the refund. Now this goes back to the slides that we just finished. So let's handle first the return. all right? So the return looks like this. Our debit is going to be to inventory because that's what we're getting back. And the inventory that we're getting back is this, right? So in the amount of 16,800, right? And then our credit goes to our estimated returns inventory. And that is for the 16,800. All right, so that was us taking care of the return. And now we're gonna tackle the refund. Okay, so I'm gonna. Now the refund looks like this, right? This is the amount that we're giving back to the customer. So to record the refund, we're gonna do the customer refund pay in the amount of, I'm running out of space, sorry. In the amount of the $27,440. And then my credit is going to be, well, they are wanting a cash refund, right? So if I'm not mistaken, if I go back here, they're wanting a cash refund, right? So in order to record this cash refund, it's going to look like this. We're going to do a credit to cash. Our cash is decreasing by the 27,440. Okay, so hopefully you guys got that and how we went step by step to identify it. Again, it did not ask for this part and it did not ask for this part, but it's just good practice to get into the habit of writing out those journal entries so you understand what they look like. Okay, it becomes easier to do the other portions of the problem. Okay. So with that, I am going to stop this video and then we're going to pick up on doing adjusting entries.